Hello and welcome. My name's Ryan Johnson, and this is the Saltcast. This morning, I welcome Jason Parr on today. Welcome, Jason. Good morning.
Hey, great to be here. Good morning to you. And then there were two.
And then there were two. That's okay because sometimes if there's four of us on here, sometimes I don't get my questions answered. But today, that's going to happen. But Jason, today, as I was preparing, I was reminded of a story, but before I get into that, there's our podcast, of course, is called the Saltcast. That's because SALT is an acronym for state and local tax, which
hmm
includes sales tax and use tax. And I have the idea of like, let's talk about, what the pillars are kind of a successful sales tax strategy or sales tax department, that what you would need. And I was just reminded, it's kind of funny because you think about Lot's wife, you know, she turned into a salt pillar. I don't want this to be, a negative, but this is like the positive salt pillars that you need. Not
Yes.
not a Lot's wife salt pillar. This is good stuff. This is the kind of pillar you want
Yeah, if you don't
to
want to
add
turn
salt.
into a pillar of salt, then you want to have successful pillars in negotiating salt.
There you go.
How about that? Yeah. Well, salt's a big deal, and more and more so, sales tax as a part of state and local tax is more and more an issue. Obviously, we've talked about Wayfair for over 4 years. We've talked about enforcement. We've talked about the three questions that everyone needs to answer to help themselves be compliant. But when you really start thinking, how do I build out sales tax processes that can manage the responsibilities that I have and allow me to truly work on growing my business or growing professionally or developing the things that I want to develop aside from these other responsibilities. And really, when you think about sales and use tax and pillars of success or things that you should have in place, there's some principles that you have to cover, right? At Pizer Johnson, we always say that you have to start with Nexus, and we don't just say that as a fun saying. It is the genesis of your responsibility for even having a sales tax process in place, because that genesis is what creates your responsibility to collect and remit tax right off the bat. So you've got to have a good understanding of Nexus. You've got to have a good understanding of determining Nexus, physical Nexus, economic Nexus. That's got to be a part of your organization as far as that's the first pillar, right? You start with Nexus. Um, and then I would say the second one is taxability, right? So if you have Nexus, we've talked about this a lot. If you have Nexus, then you have to look at what you sell state by state and determine, is what I sell taxable in that state? And a lot of people, might feel like that's not a very complex issue. We just collect tax, but um, states tax different things. They tax different property. They exempt or make non-taxable certain property, or sometimes they have reduced rates for certain types of items that you sell. And then states have every variation that you could imagine on whether services are taxable. Back in the day, I don't know, even 5 years back, people would say, hey, we only provide labor. Labor's not taxable anywhere. Well, yeah, no, you definitely need to understand the taxability of your sales and services. And
Well,
oh, go ahead.
yeah, I just had a question. You know, you said 5 years ago. So what if someone did look at their nexus and taxability 5 years ago, let's say when Wayfair came around? Um, do those laws ever change? Like if like is the taxability of your product or service going to change? Does it ever change? How often should you even be looking at it?
Yeah, it definitely changes. I mean, states have shortfalls. Sometimes they have excesses. Sometimes they have lobbyists and other industries and organizations that push for changes in sales tax law to exempt certain items that are used in certain ways, or to exempt certain types of entities, or to, a state might be considering whether they want to tax food because that's a huge burden on its citizens. Maybe they're thinking about, maybe we want to reduce the tax on food. Maybe they do that over a period of time. And so, grocery items might be taxable at 5%, and then next year 4%, and the year after 3%. You have to be cognizant of those types of changes. Maybe they provide a reduced rate to incentivize certain type of activity in the state. So most definitely, state laws change on the taxability of items that you sell. And you're trying to determine that taxability where maybe you were looking at one, two, three, maybe even, a dozen states. Now you have customers in multiple states. Wayfair came along. You have Nexus now in 40 states, not a dozen states.
Mm.
And you need to know the taxability of your products and services in 40 states now. And it's not just general across the board. Every state's not going to tax it the same way. But if your item is taxable, after you go through the complexity of determining, do I have Nexus, is what I sell taxable, now you also need to make sure that you're collecting the right rate, right? That's another pillar. So Nexus is a pillar, taxability is a pillar, rates. I need to have accurate rates that I'm collecting, and I need to be able to collect that rate typically nowadays based on a rooftop, right? I need to be able to determine at this very specific location, pin on the map, what's the tax rate I'm supposed to be collecting in that jurisdiction, because the states have become more sophisticated, and you've got, in most states, you have a state rate, and then you have other local taxes that might be subject to the item that you're selling. And so it's not just a broad zip code or the name of a city. It's oftentimes with special zoning districts and other types of taxing districts. You've got to know specifically where it is. When it comes to taxability and rates, that's where Pizer & Johnson really touts automation.
Mm.
We don't tout automation across the board because we have this concept that we ask people, did you set it and forget it and now you regret it, right? We'll talk about some other pillars, but when it comes to taxability, when it comes to rates especially, that's when automation really is your friend, because there's so many opportunities out there where the tax law is built in, so you're not having to make tax determinations yourself. The key there is ensuring that what you sell, the products and services that you sell, are mapped to their tax codes correctly. That's where you want to get someone like us involved to make sure that the results that come through their research and software application are matching up with the actual product or service that you sell. Because the definition of your product or the definition of your service may fall under a category of taxation that maybe you don't think about. Just one quick example: if I provide IT services in the state of New York, and part of that is to observe your system for any security breaches, in the state of New York, that's considered a security service, which is taxable in New York. So you might say, hey, I just provide IT services. I manage people's assets on their network. I let them know about breaches. I help them fix breaches, whatever the case may be. Oh, you notify them of breaches? Yeah. Okay. Now your whole service is taxable in the state of New York. Big case from a company in Georgia got hit in the state of New York because they just didn't realize that IT services, which are not taxable in a lot of states, are taxable in some states because the definition of what they do, not what they call it, right? So yes, taxability and rates are really valuable. From an automation standpoint, it's really valuable to use a platform to make those decisions, but you have to be careful what you map your products and services to
Yeah.
within the system, the tax code that you map.
I was
Um,
uh, I was chatting with the guy the other day who is in Canada, and he was talking about how the Canada system works. He's like, in some cases it's really simple, but he's like, I don't. It's like the U.S. thinking about it's so complicated. I was like, well, it's like, are you? It's like, but don't you just collect the state tax rate? That's what you apply to your product. I'm like, well, depending who you're talking to, there's either 11,000 or 13,000 different jurisdictions with potentially different rates. I mean, it's not just the state. I mean, you're looking at city, the county, and the state rate. I mean, it's not like it was like, oh yeah, there's what 45 different rates. How
Yeah.
complicated could it be?
Yeah. Yeah, not that simple, that's for sure. When you think about European countries and most other countries, they have some sort of a value-added tax, right? The VAT, and it's due on all goods and services, all the way down the chain. It's very straightforward. There's going to be this large percentage of this national tax that's going to be applied to all goods and services. Very few exemptions. There's still some nuances to it. I'm not trying to say it's overly simple. There's still some complexities, but you're dealing for the most part with one rate on a national level, right? Then you get to Canada, which has what they would say is a VAT tax, but it really operates more like a sales tax in the States. And they have their general rates, their national rates. They have some state rates or other jurisdictional rates. They've got some harmonized rates, provincial rates. And so, yeah, theirs is a little more complex because they're dealing with a dozen rates at most. But yeah, then when you move into the US, you're dealing with not just 45 states who impose a sales tax, and now Alaskan boroughs and local jurisdictions that impose a sales tax, but you've got other types of occupation taxes and activity taxes. Oregon doesn't impose a sales tax, but they impose an income tax and an activity tax. And so you run into all sorts of different situations there. But just dealing with sales tax, you're right. You're dealing with thousands, potentially tens of thousands of different rates in different jurisdictions to determine that classification. And so we say automate, 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 automate. And I'll just throw out there's some great automation technology providers out there. A new one on the scene, a new startup and somewhat of a disruptor on what we've seen from the technology on taxability and rates, the determination of your sales is Ceratax. That's just one to check out and take a look at. But let's say these pillars, you've got something in place to understand what your Nexus footprint is. You've got something in place to determine taxability and rates. You're feeling good about that. Now you're going to have customers who come back to you and say, oh, hey, by the way, don't tax me because I'm this type of entity, or don't tax me because what I buy from you, I use this way, which the state allows me to purchase tax-free. And so you're going to start having these situations where people are saying, hey, don't charge me tax. Now, the only time you don't charge tax, if you have Nexus, what you sell is taxable and you've got the right rate to collect on it, is if somebody provides you a certificate. And so this happens, everybody's familiar with this if you've dealt with sales taxes. You need to maintain those certificates and you've got to have some way to manage those certificates. And there's some good automated approaches to managing certificates out there as well. More and more people are getting away from this idea that we just keep a bunch of hard copies in a physical binder. And when the state shows up to audit you, they're looking at all of your sales and they're saying, okay, we want to make sure you collected tax on items that are taxable. We want to make sure that you collected the right rate for our state. And if you didn't collect tax, we're going to determine whether you should have or that you have a certificate in place. So the state's always going to be looking at certificates. So you have to have a way to manage the certificates and the flow of certificates that come in from different customers who claim exemption, because you're not expected to be a tax professional and determine if they are allowed to claim the exemption that they're claiming, but you do have to do your own due diligence that the form is, you've taken it in good faith, which means that you've taken it completed properly. If it's not completed properly, then the state will say, well, we're just going to say that you should have collected tax on this and then assess you with penalty and interest. So you got to have a way to do that.
Yeah. Um, a question that we used to get on our webinars about that, because we did the 5 hotspots, and that was
Hmm.
one of them, was exemption certificates. And one of the common questions we got was, do you have to collect an exemption certificate every time there's a sale from a customer? Like, does each transaction need an exemption certificate, or do you kind of have one per customer or supplier, or whatever it is?
Well, the great
Is
answer in sales tax is it depends, right? That's pretty consistent, our response. But when it comes to these types of transactions, most states will indicate that this is a transactional exemption, meaning that this exemption is for this transaction, or they can provide a blanket exemption, meaning everything that I purchase from you is not taxable to me because of the way that I use it or based on the type of entity that I am. And so it's important to collect the proper certificate, but typically your customer is going to know whether it's for this specific transaction or if it's for all transactions. So there are different ways that you can claim that exemption. Regardless of that, you have to maintain a record of it, and because the state's going to scrutinize those transactions where you didn't collect tax on something that the state says, hey, typically this is taxable. So you always want to collect tax, and if you're not going to collect tax, you want to collect a certificate in lieu of that tax, and that's one of the pillars of a solid sales tax process. Is you know to collect a certificate. If you're selling a taxable item, you need to collect tax on that, but you collect a certificate from a customer in lieu of that. Otherwise, there's no option. If the customer says, hey, I'm just not taxable, but they don't provide you a certificate, I'm sorry, I have to keep charging you tax until you provide me a certificate claiming your exemption.
Yeah, that's a good strategy. Do you have to have the paper form in physical form, or can you supply it digitally to
Yeah,
the
that's the
auditor?
beauty of automation technology today. You can receive it digitally. It can be stored digitally. You can receive it on paper. It can be scanned in. And that's really our recommendation is that if you're getting, even if you're getting more than 10 certificates a month, you really should consider digitizing that and getting a certificate management system, which has the ability to verify it's the correct form, verify the information on the form, gives you a lot of confidence that the forms you're collecting are accurate and that they're filled out completely, because it'll give you some errors and say you need some additional information. Um, you can keep it in a hard copy binder, but those are going to be scrutinized differently than those kept within a digitized system. And in a digital system, you often can do searches and can look them up very quickly. Whereas I've been on audit meetings or audit situations where you've got multiple binders of paper certificates, and they may or may not be in alphabetical order. They may be in a batch type system, and you're literally having to go through all the certificates until you find the one, and then you find out the one didn't have a piece of information that it needed. So, okay, this transaction is going to be taxed. And you got to go back to the customer and you have to ask them for a new certificate with proper information. If they're no longer in business or they're just not a great customer, they may not respond or provide that information. And you have a very limited scope, very limited window of when you can provide these corrected certificates in those types of situations. So if you collect more than 10 certificates a month, you really should have a way to store those and manage those. And there's some great um, management tools out there for people to do that. But you got to find a way to deal with that because you're going to have customers that claim exemption. Um, how many pillars is that? That's nexus, taxability, rates, and certificates. Even in the world that we're in today, you would be surprised by the number of companies that have not looked at their Nexus footprint, not looked at their responsibility for registering and collecting tax. And so you're still going to have vendors today who aren't collecting tax from you when they've sold you a taxable product, or they simply haven't crossed the Nexus thresholds, and so they haven't registered, and so they don't even have the ability to collect tax from you on the sale. So you still need to have the ability to look at your purchases now, right? capitalized purchases, expense purchases. This is not on the sales side. This is looking at what you purchase and determining whether tax should be remitted to the state on the purchase, on the location of the purchase. So you have to have some expertise, some way to look at your purchases, look at whether tax was collected and whether tax should have been collected. And I would say you need to be able to look at that on both sides of the coin. Maybe they're charging tax and you're buying something that you could purchase exempt. So, oftentimes people recognize refund review. Maybe they've participated in a refund review before, but it's important to note whether you're overpaying or underpaying tax on your purchases of expenses and capitalized items, and manage that. So you have to have a way to manage that. So if you're buying items and they're not collecting the tax properly, you may have to have a way to self-accrue that tax and self-remit it to the state. So that's an important pillar of being compliant when it comes to sales tax. The last pillar, which to me is the most important pillar, and this is the one that we see the greatest amount of struggle when you've simply tried to automate this, is the actual sales tax return filing and remittance of the funds. You have to have a good process in place. You just have to recognize that most companies who have been registered in 3 or 4 states because of where they do business are now registered in a dozen states, 20 states, 40 states, because their responsibility is based on where their customers are located now, not just on where they're located. And so maybe you've had an in-house approach to doing the returns. Maybe you have set it and forget it, and now you regret it because for whatever reason, the remittances are not going the way that you would hope they go. Maybe you're paying more than what your dashboard says is due, or more than you've collected. Maybe you're underpaying, and you don't have a way to get in touch with someone who can help you rectify and fix that situation. This is the biggest thing that we see in the industry right now. You really want a consultative approach, or you want some in-house expertise when it comes to managing, making sure that the returns are prepared properly, that they're accurately prepared, that they're timely filed, and that payments are being made appropriately and accurately for those things. To me, that's one of the biggest pillars. Once you've figured out, do I have Nexus? You know your footprint, you're managing that properly. You understand taxability and rates. Maybe you have an automated solution for that. You're consistently looking at the tax codes, the mapping, how that's done. You're feeling good about how that's set up. And you're collecting and managing the certificates related to the sales, to the exempt sales that customers might be claiming. And you recognize what your use tax responsibility is on your purchases. If all that's in place, those pillars are in place, then that final approach to making sure that it's properly filed is a big, big deal. And we recommend the outsourcing side of that because it's just something that most people have not developed the experience and the expertise to do in an efficient way. And there's a lot of outfits out there that can help you do that in an efficient way. We just recommend that it's done in a consultative approach, not just a set it and forget it approach. At minimum, you've got somebody that's managing that system to make sure that everything's being handled properly. Because the end result, even if you have the best sales tax process in place, is you're likely to be audited and you're likely to get notices. Even if you file perfectly, the states are notorious for sending out notices. The notices might not be related to any errors that have occurred. They're just letting you know about updates in rates. They're letting you know about updates in filing frequency. If you were set to a quarterly filing frequency and now they say you need to file monthly and you don't start filing monthly, then that creates situations. Maybe you've been filing monthly and they've moved you to semi-annual or annual and you're still filing every month and you don't need to, but you're also creating issues at the state level because they're not expecting those returns coming in. It could be any myriad of reasons why you're getting these notices, but the notices need to be managed. You need someone following up with the state, making sure that there's nothing that needs to be done to resolve or rectify a question that the state has. And you need to be responding to the state when they do have questions or they do make claims or demands, even if you filed correctly and they send you a notice saying, hey, we didn't get your return or your return was filed late. And you have to send them information saying, hey, you have the return, you have the funds. Here's the information that shows that they were filed timely, et cetera, et cetera. All of that has to be resolved, because if notices go unresolved, they turn into more notices, then they turn into demands, then they turn into assessments, and they can potentially turn into a lien on your accounts and doing business in a particular state because you chose just to ignore something that you knew was a mistake. You still got to deal with it. So even with the best laid plans, the 6 pillars of success, the 6 principles that need to be met and fulfilled as it relates to sales tax processes, will still end up with notices and audits, and you've got to have you have to be prepared to manage those and deal with those as they come up.
Yeah, I think that's amazing. And I know firsthand that notices can occupy a lot of your time because sometimes states are so slow with responding
Indeed.
and what you need. But I'm going to come full circle with Lot's wife here. But unlike Lot's wife, you will not turn into a pillar of salt if you decide to dig into your sales tax problems. You will only, if you establish these pillars, it'll only bolster your confidence in what you're doing, and that knowing that, you'll be, if you get, under audit, you'll be audit ready. You won't
Yep.
have to be, worried about the outcome because you've established these pillars.
One of the important principles that we share here, one of our core values, is collaboration builds confidence. We all want to be confident in the steps that we're taking. And so we consistently tout and invite everybody to get on what we call is a what's next call. It's a free consultation to just share some information about your situation and get some tips on best practices and find resolution in whatever questions that you have. And when you do that, you really do have confidence that, okay, I've looked at this and I think everything is in good shape. I'll give you an example. We recently in our home moved a thermostat. And when you move a thermostat, you're supposed to turn off the power to the air conditioning unit that you're moving. But we didn't know that. But we did note that when we moved the thermostat and connected it back up, that the unit was not working. So I went up to the unit, and I imagined in my mind that we probably fried a board of some sort or created some sort of surge or situation when we did that. So I kind of had an idea that we did something electrical, and I could purchase and replace those boards, the electrical components. I didn't know if they worked or didn't work. So I contacted an expert, a friend of mine who knows this information, and had them come over, take a look at it. He was able to confirm exactly what happened. I could have tried to change things and made it worse. I could have guessed at it and got it right, which would have been great. But it was so relieving to have someone who knows exactly, could test it, knows what needs to be replaced, how to get that replaced, and could replace it, even though I thought I knew what the situation was. I had much greater peace of mind when I brought somebody in who could see it and observe it quickly and know exactly what needed to be done. So for me, that's the role that Pizer Johnson plays, right? And even though I had to pay for that person to come in, you don't have to pay to chat with us about your situation and collaborate on what you're trying to get done. We really love the opportunity to help other people and provide some peace of mind when it comes to SALT and specifically sales tax.
Exactly. Well, Jason, thank you so much for being on with me this morning. I think it's a very successful podcast, and I think this will benefit everybody. If you deal with sales tax, this is what you need. But we hope to see you guys on another one.
Catch you later, Ryan.